Hi guys, did you miss me? Of course you did. Well, I was quite busy. I moved to Frankfurt, as I said in the previous video. I had to buy a lot of stuff for my apartment. I still haven't got anything. We opened an office just down the street, like 10 minutes or so, walking, which is quite nice. And I have a beautiful view in my new home office, which I really appreciate a lot when I'm working. Besides that, I had a lot of problems with my internet provider. It was horrible, seriously. I have a new one now, fiber, 1000 megabits, upload and download, so that is quite awesome. Fastest internet I ever had, besides in Hong Kong. Besides that, things are great. I'm slowly getting used to living in Frankfurt, but of course after being here for quite some time, I think 2 months now, I'm already feeling it again. I have to get back on the road. Maybe I'm planning a small trip here and there in the future, because I never wanted to be really bound to one place. When I want to go, I just go, and I'm looking forward to that. Right now I'm thinking about a few possible places, or simply renting a villa at the beach and staying there for a week or two. That would be quite nice. Some of these mini holidays, well, they're more like working holidays, because of course I'm always trading and working even when I'm on holiday, but then maybe only half a day, and I enjoy the other half of the day at the beach or drinking or whatever. Yeah, I have been quite busy with my algorithmic trading and development as well, which is going quite fine. The portfolio is running smoothly. I can't complain. I'm pumping more and more assets into it. Right now I'm just system sizing, not position sizing, which also brings me to the thing I want to talk about today, which is position sizing. I just briefly want to touch on this topic, because I think when I started out I had a huge problem with position sizing psychologically. You hear that the standard advice is to risk 1% per trade. Now, while that is an okay advice for a lot of people, for some people, it might not be for a lot of people. Why is that? Well, firstly, all of us have different financial profiles. Some of you might have $10,000 for trading, some of you might have $100, and a few of you might have 50,000, 100,000 or more. Now, if you want to make meaningful returns with a $100,000 account, even if you risk 0.25% per trade, which, by the way, I suggest if you are a day trader, then you can make quite meaningful returns in a month, if you are profitable, of course. In the beginning you should focus on capital preservation, not on making wins. However, if you only have a $100 account, risking 1%, $1 per trade, that's just horrible. You're never going to have the discipline needed to trade the way you would if you, for example, risked $100 per trade. I think you would even be better off with a demo account with $50,000, for example, because at least you could see some zeros, and it would feel much better to learn trading that way, to see the zeros, virtual zeros in your demo account, than seeing $2 plus at the end of the day, which is just a nightmare. You can make more money flipping burgers at McDonald's, right? So the point I'm making is, if you have a lot of money, you shouldn't risk 1% only because you can. Maybe some of you have $500,000. Should you risk $5,000 per trade as a beginner? No, of course not. You shouldn't, right? You should bet much less than that. Go for a size that hurts a little when you lose and makes you feel joy when you win. Now, I know emotionless trading, all that, blah blah blah, but we are all human. For me, that is the perfect position size, where it hurts a little when I lose, but I can sleep at night. And I'm quite happy when I win. So, for example, that could be $500 per trade, or 500 euros. When I lose 500 euros, it hurts. It could be a nice shopping trip, could be a flight to somewhere, economy, could be a PlayStation or whatever. If I win on a trade, I usually make 2R or more, so that's 1,000 euros, sometimes 1,500, 2,000 euros. That is nice money. I mean, that is more money than a lot of people make per month. So that could be an example of a perfect position size, 500 euros. Now, you would need 50,000 euros to trade a size like that. If you were a swing trader, I would never recommend 1% per trade for day traders, because your swings, if you take 10 trades in a day, your swings can be horrible. 0.25 to 0.5% as a day trader is absolutely fine. Unless, of course, you want to play big, you can try risking much more and try to scale up your account. I wrote a few articles about that. It is possible to scale up small accounts into large accounts in a short amount of time using leverage. Well, maybe not anymore after ESMA, horrible regulation, but I'm not going to talk about that today. Anyway, so if you want to use leverage, you can do that, but only with small accounts. And then once you reach size that is meaningful to you, could be $100, $200 per trade. I think for first world industrialized countries, 100 euros to 200 euros is a good bet size for a lot of people, psychologically and in the way of having a meaningful bet size that allows you to buy yourself something nice if you win, but it also allows you to stay disciplined enough, because you don't want to lose 100 euros on stupid mistakes. And then, of course, another thing to consider is returns. If you risked 1 or 2 or 3% on all of your trades, how would that affect your account volatility? How would that affect your returns? Would you still be able to function psychologically if you risked more on your trades? So you would optimize your returns, maximize your returns, at least mathematically. But would you still be able to function and achieve those same returns over the same amount of time if you would bet much more? Or would your stress decrease a lot and your performance stay the same, because your actual execution skills in the market would increase if you bet less? That's another very interesting question to ask, I think. If you bet only 0.5% per trade instead of 1% per trade, would your performance in the market increase so much that you suddenly would double your returns basically, but at the same time have the same yearly outcome, simply because you reduce stress and you have much better decision making suddenly? Think about it. Look at your journal. Look at your historical trades. What would happen if you bet this and this and this on all your trades historically? What would happen if you bet more on AAA trades and less on worse trades? Those are all important questions to ask, I think. You can play around a lot with that. So if you are right now a losing trader or a break-even trader, think about position size in a way of decreasing stress and increasing your performance. That means maybe you have to risk more, maybe you have to risk less to be able to pull off discipline and psychological endurance. Think about your emotional capital as well. If you are a winning trader right now, look at position size in the meaning of, how can I maximize my returns while decreasing psychological stress or strain on my mind, my body, my health, my psychological health? If you can decrease your position size and make the same kind of returns, simply because maybe you can take on more trades, you are more relaxed, you sleep better, you have better execution skills in the market, then that is absolutely the way to go for me, because it also decreases account volatility much better. Or you are betting too little right now, then you want to increase your position size slowly and see where it can take you. You could also decrease your position size during losing streaks, increase it during winning streaks, and so on. There are a lot of things out there to get creative with position size. I just urge you to think about it in a more creative way, but never forget, a losing system can never be turned into a winning system by position sizing. That's just the way it is, mathematically. Alright, that's it for today. I hope you learned something new, maybe you got some new ideas, and I'll see you soon. Peace out.